Hello everybody and welcome to the midweek market update from Smack the Markets for the 8th of April. Now this week so far we've already started to see a little bit of green shoots as to when the lockdowns in some European countries are likely to be ending. We've also seen, of course, in China that the lockdown is rolling back now, and normal life is sort of starting to get back to some sort of normality. Markets this week so far, again, they've been fairly sort of volatile. Again, that's on the sort of back of relatively light news flow as well at the moment from the fundamental perspective in any case. Going into the beginning of, or the second half of this week, I should say, we've got the minutes of the FOMC meeting later on this evening. That's likely to be quite closely watched by traders, as is since the last minutes we've had two interest rate cuts and those big moves by the Fed, of course, over the past few weeks. So let's have a look at how the markets have fared that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. Now, if we come and take a look at the Dow first of all, this is the Dow Jones futures contract. On Monday, we were talking about the market getting above this 22 level, so just north of the 21,900 level that we have marked in our charts here. So we were looking for, if the market could get above here, we could be looking for a move up to 22,360 and then possibly a move up to 23,300, this trading window up here. Now that's actually happened. The market sort of played out very technically to those levels. Yesterday, we discussed in the trading room the possibility that the market actually may be forming some kind of sort of top here, certainly in the sort of near term because of the strength of that level. If we just take a quick look at this on the weekly chart, the 23,300 level you can see right the way back through here in the structure of the trend before we had anything to do with the coronavirus effect in the US markets. You can see that the market had already put in some key support around that area. So the market sort of coming back up into that area, also close to the 50% retracement of that whole move, of that whole sort of downward move, meant that there was likely to be some sort of resistance forming there. So that certainly sort of played out yesterday. The market rolled over and came back down to rest on the 22,336 area too. So we've got a bit of a bounce here, and from a technical perspective, looking at this on the 4-hour time frame, there is sort of evidence here of sort of buyers coming back in. We've seen that sort of bounce with this green candle, and now there seems to be again another sort of retest of the 22,36 level. This is certainly sort of a key established decision point here, and I think this is going to be very much in play today and going into the second half of the week. So the big decision here is for the markets: is the market going to find support here? If so, we're going to be seeing 23,300 tested, possibly even a breakthrough here, and maybe even pushing up towards 2,400. If the market fails this, then we could start to see these lower trading windows start to get tested and closed again. So a failure of support here at 22,360, I think we'll see 21,900 fairly quickly, and then back into this sort of 21,000 zone down here. So that's what I'm looking at on the Dow, and mainly the trading opportunities here are going to be on intraday timeframes. Now, also on Monday, we discussed gold here, and we discussed gold above the 1660 level. So if we just open this up on the 4-hour time frame, on Monday the market was starting to see some strength coming back in. We saw the market break through 1660, which was sort of very nice. We had that big move higher. Now the market sort of retraced back. We like gold here above 1660, and again looking at opportunities here for continued long positions. Now gold from a higher time frame perspective doesn't look the most easiest of charts to trade, because you can see here on the daily time frame very very sort of unstructured market. Getting down to the sort of 4-hour and 8-hour timeframes do look to be the more sort of cleaner price action, and you can start to see some sort of technical structures here to help us as technical traders. We are in the context of a long trend on these mid time frames at the moment. Now, another market that's looking sort of fairly similar is, and probably a little bit easier here on the technical structures, is silver. So these two markets are highly correlated. They tend to move in a sort of similar direction. We can see that here on silver, the sort of 1500 level here, $15 level here, has now been sort of taken out. And for us, we were looking for this sort of trading window up to around sort of 1650 on silver once this sort of level got taken out. Now, we can see that the market's halfway there at the moment. And coming down to these sort of mid time frames, again, you can see much better structure on these markets, much cleaner trends. And again, you know, we can see that we've got good long trend here, moving averages in the right order, and again looking at opportunities here to trade this market. Probably got up to around sort of like that 1650 area here on silver, which brings it into this previous support and resistance. So quite a nice sort of clear trading window that the market's in at the moment. Now, the other market that we discussed on Monday was euro dollar, and if we take a look at we can see that euro dollar, I mean, this market's been really sort of whipsawed on these higher time frames, as we can see. The level that we were looking for here was 108. We're looking for opportunities below 108. Now, if we take a look at this on the 4-hour time frame, a little bit easier to see, I think, that on Monday the market had come down. It was consolidating on around this sort of 108 area, and again, we were looking for opportunities below this level. So once the market sort of broke through here, down towards that 106.50 in the sort of near term, and then for a next move down towards sort of 105.50. Now, what we've seen here is very much a sort of a dollar play that has meant that the euro against the dollar here has bounced. We've seen the market sort of play out technically to 109 again, which is another key level on this market, and we've got that sort of roll off here so far. So again, if the market sort of gets down below 108, you know, we've still got a bit to go on that, but underneath these sort of lows here, again, you know, our preference is for markets opportunities to the short side down to these two structure levels that we've been looking at. If the market sort of takes out this sort of 109 high up here, then of course, you know, the mid time frame trends here are now broken, and we'll need to reassess opportunities. If this gets sort of taken out, I think we'll certainly see possibly a retest up here to 1.1. So there's sort of opportunities sort of either way at this moment in time, but our preference at the moment is for shorter moves on the euro. So there's a few opportunities there that we're keeping a close eye on going into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.